We talked earlier about the buyer's responsibility in the withholding of tax money, but let's dive a little deeper. It's one of the most misunderstood parts of FIRPTA. Here's why the buyer is responsible for withholding up to 15% of the gross sale price when purchasing U.S. real estate from a foreign person. FIRPTA Basics. FIRPTA stands for the Foreign Investment in Real Property Tax Act. It's a U.S. federal tax law that ensures foreign sellers pay capital gains taxes when they sell U.S. real estate. Why the buyer withholds, not the IRS or seller directly. The IRS doesn't trust that a foreign seller will file a U.S. tax return or pay any tax owed after the sale, especially if they leave the country. So instead of chasing the seller later, the IRS makes the buyer responsible for withholding and remitting the estimated tax at the time of closing. This makes the buyer a withholding agent. If they don't withhold when required, the IRS can come after the buyer for the full amount of the tax, plus penalties and interest. Why 15% of the gross sale price? It's a safe estimate of the tax the foreign seller might owe. The actual capital gains tax might be lower, but the IRS uses the gross sale price, not just the gain, to guarantee enough is collected up front. The seller can later file a U.S. tax return to claim a refund if too much was withheld. Bottom line, buyers are on the hook for FIRPTA compliance. If they don't withhold properly, they could be liable for thousands in taxes that the seller should have paid. The 15% comes out of the seller's net. It reduces their proceeds at closing. It's a prepayment of tax, not the final amount owed. The seller can later get a refund, if eligible. The 15% withholding is deducted from the seller's gross sale price at closing, and that amount is sent to the IRS, reducing what the seller walks away with, i.e., their net proceeds. Let's break it down with an example. Sale price, $800,000, FIRPTA A withholding, 15%, $120,000. Escrow sends $120K to the IRS. The seller receives $800,000, $120,000, closing costs, mortgage payoff, quadrist net proceeds. This is why it's critical for real estate agents to identify FIRPTA situations early and make sure buyers and sellers are working with tax pros or attorneys when needed. Required IRS forms under FIRPTA. When a foreign person sells U.S. real estate, the Foreign Investment in Real Property Tax Act, FIRPTA, requires that up to 15% of the sales price be withheld and sent to the IRS. The main forms involved are Form 8288, U.S. Withholding Tax Return for Dispositions by Foreign Persons. Purpose: used by the transferee, buyer, or withholding agent to report and pay the FIRPTA withholding tax to the IRS. Due date: within 20 days of the date of the transfer. Key info required: O name, address, and TIN of the foreign seller. O description and location of the U.S. real property. O amount realized, typically the sales price. O amount of tax withheld, usually 15% of the gross sales price. O attachments, must include Forms 8288A for each foreign seller. Form 8288A, Statement of Withholding on Dispositions by Foreign Persons. Purpose accompanies Form 8288 and provides a breakdown of the withheld tax attributable to each foreign transferor. Details the amount withheld and the identity of the seller. IRS. Process. OIRS stamps a copy B of the form and sends it to the foreign seller. This stamped copy is essential for the seller to claim a refund or credit by filing their U.S. income tax return. Key info required: foreign seller's TIN. Withholding amount related to their portion of the sale. Important note: if the foreign seller doesn't have a TIN, Form 8288A cannot be processed, and the IRS will not issue a stamped copy, potentially delaying any refunds. Form 8288B, Application for Withholding Certificate Optional but Strategic. Who files it? The foreign seller, or on their behalf. Purpose: used to request a reduction or exemption from FIRPTA withholding, e.g. if there's no gain on the sale. Timing should be filed before the transfer. If the IRS receives this form before the sale, the buyer may withhold less or delay withholding until the IRS responds. Typical reasons for request. Oh, no taxable gain on the sale. Oh, the seller qualifies for non-recognition treatment, e.g., like-kind exchange. Oh, the property is used as a personal residence and the amount realized is under a certain threshold. Privacy concerns. Key privacy considerations. 1. Confidential data sharing. O forms 8288 and 8288A are not public, but they include private taxpayer information. O, any party handling the forms, agents, escrow, CPAs, must protect this data under IRS regulations and federal privacy laws. 2. ITIN protection. O foreign sellers must have or apply for an ITIN to receive credit for the withholding. O, this requires careful submission of identifying documents to the IRS or through a certified acceptance agent, CAA. 3. Data transmission risks. O, emailing unencrypted forms or ID documents is risky and could violate data protection standards. O, best practices include secure portals or in-person delivery. 4. Handling stamped form 8288A. O, the IRS stamped copy of Form 8288A is essential for tax filing. O, loss of this form can delay refunds or tax credits, so it must be handled securely. Handling FIRPTA involves sensitive personal data, including Social Security numbers, SSNs, or ITINs, individual taxpayer identification numbers, foreign addresses, property sale details and financial information. Best practice. Only share TINs through secure encrypted channels and redact when forms are shared for general reference. Disclosure of personal and transactional details. Forms 82888, 8288A contain detailed information including O names, addresses, TINs, O sales price, and property description. If these forms are mishandled or accessed by unauthorized parties, there's a significant risk of privacy breaches. Document retention and access. Brokers, escrow agents, and attorneys involved in the transaction may retain copies of FIRPTA forms. Ensure these parties follow secure data storage protocols and limit access to those with a legitimate need. FIRPTA documents are not public records, but privacy could still be compromised through data leaks or cyber attacks. Buyer. FIRPTA compliance checklist. Task required? Notes. Confirm seller's citizenship, chart residency status. Always use the affidavit above. Get signed. FIRPTA affidavit before closing. If seller claims to be non-foreign, must be under penalty of perjury. Withhold 15% of gross sales price. If seller is foreign, unless an exception or reduced withholding certificate is approved, file IRS Forms 8288 and 8288A within 20 days of closing required. If withholding occurs, remit withholding to IRS. Within 20 days of closing, send with the forms, retain documents, always keep for 5 years in case of IRS audit, sample FIRPTA affidavit, certification of non-foreign status per IRC 4545. To avoid withholding under FIRPTA, the transferee, buyer, must receive this affidavit before closing. It must be signed under penalty of perjury. Certification of non-foreign status. Under Section 1445 of the Internal Revenue Code, name of seller, transferor, residing at, am transferring the U.S. real property located at. I certify the following. 1. I am not a foreign person, as defined in Section 1445 of the Internal Revenue Code. 2. I am a U.S. citizen or a resident alien for U.S. tax purposes. 3. My U.S. taxpayer identification number, TIN, is 4. My address, permanent residence or office, is listed above. I understand that this certification may be disclosed to the IRS, and that any false statement contained herein could result in penalties, including criminal penalties. Signed under penalty of perjury, this day of 20. Signature of transfer, seller. Name, printed. Notes. This form must be signed by the actual seller, not an agent or representative. Keep this document on file for at least 5 years after the date of transfer. Key privacy considerations. 1. Confidential data sharing. O forms 8288 and 8288A are not public, but they include private taxpayer information. Any party handling the forms, agents, escrow, CPAs, must protect this data under IRS regulations and federal privacy laws. 2. ITIN protection. Foreign sellers must have or apply for an ITIN to receive credit for the withholding. This requires careful submission of identifying documents to the IRS or through a certified acceptance agent, CAA. 3. Data transmission risks. Emailing. Unencrypted forms or ID documents is risky and could violate data protection standards. Best practices include secure portals or in-person delivery. 4. Handling stamped Form 8288A. The IRS stamped copy of Form 8288A is essential for tax filing. Loss of this form can delay refunds or tax credits, so it must be handled securely. Buyer liability. Under FIRPTA, IRC Section 1445. Under FIRPTA, when a foreign person sells U.S. real property, the buyer is responsible for making sure 15% of the gross sales price is withheld and sent to the IRS. If the buyer fails to withhold and the seller doesn't pay the taxes owed, the IRS can hold the buyer liable, even if the buyer gave the money to the seller. Buyer liability triggers. Not withholding the required 15% when seller is foreign. Not filing Form 8288 and 8288A with the IRS. Accepting a false or incomplete non-foreign affidavit without due diligence. Penalties. Full tax amount owed by the seller, not just 15%. Interest on the unpaid amount. Penalties for late payment and filing. Real-life case study, United States v. Bustos, 2013. In the case of United States v. Bustos, 2013, the court addressed a buyer's failure to comply with the Foreign Investment in Real Property Tax Act, FIRPTA. The buyer, Mr. Bustos, had purchased real estate from a foreign seller but failed to withhold the required tax under FIRPTA. Instead of securing a signed affidavit confirming the seller's U.S. residency status, he relied solely on the seller's verbal claim of being a U.S. citizen. This lack of due diligence proved costly. When the IRS discovered that the seller was in fact a foreign person and had not paid the required capital gains tax, it held Bustos personally liable for the unpaid amount, around $97,000, plus interest and penalties. The court ruled in favor of the government, affirming that under FIRPTA, it is the buyer's legal obligation to either withhold and remit the tax or obtain a proper non-foreign affidavit. This case serves as a cautionary tale, showing that buyers who fail to properly verify the seller's status can face significant financial consequences, even if the non-compliance was unintentional. Facts. U.S. buyer purchased a property from a foreign seller. Buyer relied on verbal assurance that the seller was a U.S. citizen. No affidavit was signed. Buyer did not withhold the required 10%. It was 10% back then. Outcome. The IRS pursued the buyer for failure to withhold under FIRPTA. Court found the buyer liable for the tax owed, approx. $97,000, plus interest and penalties. The judge emphasized that buyers cannot assume compliance. They must collect and verify proper documentation. Lesson. Buyers and their agents must get a properly signed affidavit, under penalty of perjury, or withhold the 15%. Ignorance or assumptions don't protect from liability. Risk management tips for buyers. Always get a certification of non-foreign status, FIRPTA affidavit, signed under penalties of perjury. If unsure of seller's status, withhold and remit the 15% to the IRS. Use IRS Forms 8288 and 8288A and submit within 20 days of closing. Work with a qualified intermediary or tax advisor if needed. Role of title, escrow companies in facilitating FIRPTA compliance. Title and escrow companies play a critical supporting role in helping facilitate FIRPTA compliance, but they are not legally responsible for withholding the tax. Their involvement often determines whether the buyer properly follows FIRPTA procedures. Key roles of title and escrow companies in FIRPTA compliance. 1. Collecting and reviewing documents. Escrow officers often request a certification of non-foreign status from the seller early in the transaction. If the seller is foreign, they may notify the buyer that withholding is required and help coordinate that step. 2. Educating the parties. While they don't give tax advice, escrow companies may inform buyers and sellers about FIRPTA obligations. They typically flag the issue and advise the buyer to consult a tax professional or attorney. 3. Assisting with withholding and submission. In many transactions, escrow handles the actual withholding, 15% of the gross sales price, from the seller's proceeds at closing. They may also assist in preparing and sending IRS Forms 8288 and 8288A and remitting the withheld funds to the IRS, if the buyer instructs them to do so. 4. Document retention. Title escrow companies often retain FIRPTA-related documents in the file, like the affidavit or withholding certificate, which can be useful for audits or record keeping. 5. Notifying of exceptions. If the seller presents a withholding certificate from the IRS or meets a statutory exception, e.g., buyer intends to occupy the home and the purchase price is under $300,000, escrow may help process the exemption, but will still require buyer confirmation. What they don't do. They do not bear liability if FIRPTA withholding is done incorrectly. They do not verify the seller's U.S. status or file tax returns. They do not decide whether FIRPTA applies. The responsibility falls entirely on the buyer. Bottom line, escrow companies act as neutral facilitators, helping collect and disperse funds, prepare paperwork, and keep the transaction on track. But it is ultimately up to the buyer and their advisors to ensure that FIRPTA compliance is fully met. Remember that the withholding comes out of the seller's net. Here's a realistic scenario that shows how the 15% FIRPTA withholding works on a $600,000 sale when the seller is a foreign person. Scenario: FIRPTA withholding on a $600,000 sale. Facts: sales price $600,000 property. Type: single-family home in Arizona. Seller: a foreign individual, not a U.S. resident or citizen buyer, a U.S. citizen purchasing the property as a rental investment. Escrow company: XYZ title and escrow. No exemptions apply, e.g., buyer will not use it as a primary residence. No reduced withholding certificate was obtained from the IRS. Step-by-step breakdown 1. Calculate FIRPTA. Withholding: the buyer, through escrow, must withhold 15% of the gross sales price, 15% of $600,000 or $90,000 withholding at closing 2. At closing, the escrow company will withhold $90,000 from the seller's proceeds. That money is not paid to the seller. Instead, escrow will hold it temporarily until it's sent to the IRS. 3. IRS reporting and submission. The buyer, or escrow on buyer's instruction, must submit IRS Form 8288 and 8288A along with the $90,000 withholding to the IRS. This must happen within 20 days of the closing date. 4. Seller's refund, if applicable. If the actual tax owed is less than $90,000, the seller can file a U.S. tax return to potentially get a refund. This often happens if the gain on the sale was lower, or the seller qualifies for deductions. Example: closing table, simplified. Item: amount gross, Sales price, $600,000 FIRPTA. Withholding, 15%, $90,000. Other closing costs, $12,000. Net proceeds to seller, $498,000. The 15% FIRPTA withholding is taken from the gross sales price, not the net proceeds, meaning foreign sellers could owe more at closing than they actually profit. So advanced planning or applying for a reduced withholding certificate is essential. This could squash the transaction if the seller does not have the extra funds to close. What that means: gross sales price, total contract price the buyer agrees to pay before paying off mortgages, commissions, or other closing costs. Net proceeds, what the seller actually takes home after all deductions, e.g. mortgage payoff, agent fees, taxes. FIRPTA withholding is not affected by how much equity the seller has or what their net is. It's based strictly on the full sales price. Example, let's say a foreign seller sells a home for $600,000. Existing mortgage and $500,000. Real estate commissions and closing costs, $30,000. Seller would normally net about $70,000 in proceeds. But FIRPTA withholding is 15% of $600,000, $90,000. That exceeds the seller's net proceeds. Escrow will still withhold the full $90,000 from the seller's side, even if it means the seller brings cash to closing or ends up with nothing in hand. This often surprises sellers. That's why it's critical for foreign sellers to plan ahead. Consider applying for a withholding certificate, Form 82288B, to request a lower or zero withholding based on actual gain. Broker liability under FIRPTA. Real estate brokers are not legally responsible for FIRPTA withholding itself. The liability for withholding and remitting the tax rests squarely on the buyer, and in some cases, the settlement agent, if authorized by the buyer. However, a broker may face civil liability or disciplinary action if they fail to inform or educate the seller about FIRPTA requirements, especially if their omission causes financial harm. Potential broker liability scenarios. 1. Failure to disclose FIRPTA to a foreign seller. If a broker knows or has reason to know the seller is a foreign person and fails to mention FIRPTA, and the seller is blindsided at closing when their net proceeds are eaten up or they owe cash, the seller could claim negligence. In some states, this could lead to lawsuits for breach of fiduciary duty or professional negligence, especially if the seller argues they could have planned differently. 2. Misrepresenting FIRPTA rules. If a broker incorrectly tells the seller that FIRPTA doesn't apply or that the withholding is taken from profit instead of sales price, that's bad advice and may be seen as unauthorized tax guidance, which can open the door to legal exposure or RE license discipline. 3. Breach of fiduciary duty. Listing agents have a fiduciary duty to act in their client's best interest. Failing to warn of a major federal tax withholding could be viewed as a breach, particularly if the client can prove they suffered a financial loss due to the lack of disclosure. Real estate. Best practice and protection. Brokers should always ask about the seller's citizenship/residency status early in the listing process. Include clear FIRPTA disclosures in the listing and purchase agreement. Advise the seller to consult with a tax professional or attorney. Never guess on their behalf. Provide FIRPTA brochures or handouts to help educate sellers. Many state associations and NAR have these. Bottom line, while brokers aren't directly responsible for FIRPTA withholding, failing to educate or warn a foreign seller about it could lead to legal trouble, financial claims, or complaints to the Real Estate Commission. Proactive communication is key to managing risk.